Right, jet setters. So I haven't done anything for a week or so. I've been off on holidays with the fam. I posted a couple of videos lately, which are basically just reposting stuff I done early in the year, which is because really the stuff I've been talking about at the beginning of the year has just all come to fruition. The only two outstandings are gold, which has started its move, and shitcoin. Everything else has basically hit the targets that I had in mind. Well, not quite, but certainly getting there. If there's any other YouTube kind of people you listen to, go back and watch what they're saying, 3 months ago, 6 months ago, and see what they say, because I do look at other guys, and frankly, they're all, not all of them, but basically pretty much all of them are full of shit, right? This guy called Tom, FX Evolution, right? It's like the market's going up or it could be down. Wait for the big breakup. Get ready, strap yourselves in. It's going to be a big episode today. Oh, this is full of shit, right? Another guy, John Howell. Honestly, gold's about to break out. It's going out. It's going out. Big move. Just wait. He's full of shit. Right? There's another guy, Greg Secker and Greg Morgan. I'll show you how. You make $1 million just trading 1 or 2 hours a day. He's full of shit. Right? The number of shysters out there is fucking does my head in, and that's why I do these videos. Look up FX Empire, a guy called Chris. He's Chris Lewis. He does some videos for a few channels. His stuff's worthwhile. Look up another guy called James Stanley. He's on Twitter. I don't think he's on YouTube. His stuff's worthwhile. Anyway, so here we go. Right. So this is my stuff. Make up your mind whether it's full of shit or not. I don't care. Right. But it works for me. I've turned 3 biscuits into about 300, something like that. 30, something like that, over the last 6 months since I've been doing these videos. Right, so this is the Russell. Here are my notes. So there's a few things that's interesting about the Russell. At the beginning of the year, I talked about a few markets having these long-term channels since the GFC. The Russell has hit it. Right? Bang on, bang on, bang on, bang on, and look where it's closed, bang on. So it's done that. It's also this is like one of the patterns that I look out for, with a vertical non-stop move up, past the parcel, and then a leg down, right? To me, that has hit the target, which is it's not quite there, but it's certainly the GFC, not GFC, the COVID high and the 2018 high. It's certainly hit those. This extension is also, I'm not sure if it's a one-to-one. Probably might be, I don't know. No, it's not. No, it could have some more to go. Is it a 61? Let's just check this out. Oh, there we go. Fucking classic. I didn't realise that. The little gifts that these kind of things give you every now and then. So to me, the Russell has had its correction. And the Russell has led a lot of these moves. Let's have a look at the Nasdaq, right? The Nasdaq, this is its long-term channel. It's way off, right? It is approaching its 200 EMA on a weekly basis, which it's touched there, got close to, got close to, got close to. It is pretty close to. If we look at the 100, it's hit it, right? And in these corrections, it's hit it a little through, hit a little through, hit a little way through, hit it a little way through. So that to me says it's at least done some of the work. Now it has stopped also at a bang on a 50% retracement from the COVID low. Look at that. I mean, that is really bang on. It's done a 1-to-1 extension of this move down. It has come back to this. That's the, that stuff around, September, October, November in 2020, and the retest. It's come back to there. On that level, it's certainly done its hard work. Now, when you zoom out and you look at on a linear scale, right? It's hard to see with all this noise here, right? It's had quite a correction. It could have more to go. That's what makes me nervous about the market. But certainly this has had a not quite a crash, but a solid correction. This 20% is the same move, or 20+%, is the same move it had down here, the 30% one, right? It's probably got a little bit more to go. Let's just check it out here. Yeah, right, 30%. I've squared up my short Aussie SPY position, and I think I'm going to square up my short S&P position as well when the market opens on Monday. So the S&P, it's hit the lower of this bound. It is a bit tricky to kind of draw, but I've kind of wiped out some of the noise from some of these wicks here, so you get some good tests in here, and it just touched that. It's hit a 38 retracement. The reason I've drawn it here is when you look on a daily, it just wipes out some of the noise that was going on. You'll see it in a moment. Some of these washouts, and it took it from this point here, right, where the market really took off. Oh, this is a futures market where it really took off. It's touching that's 100 weekly EMA, right? That 38 retracement from that whole move. The 20% fall here is the same as that 20% fall that we've had here. Most importantly, this little gap, which I've been talking about for a while, it's been filled. I'm quite happy. You might have, if you're watching my stuff, you remember me talking about this little gap in here, saying it's bugged the bejesus out of me. It never got filled, and lo and behold, that's where it's come back to. There's some guy, gave him a trade. The guy's a dickhead, right? Honestly, the stuff that he comes up with is ludicrous. He said, oh, this correction, it was bigger than a lot of us thought. I said, mate, it was not bigger than a lot of us thought. It was bigger than what he thought. But this one, this little gap, right, totally filled beautifully, actually. It's kind of textbook, right? Came back. This extension, 1 for 1, that move. You can wipe out a bit of the noise here. Right? It came back bang on to that 3,000, that kind of 4,000 level. Bounced off the 38. I mean, it's a bit of a, as I said, technical analysis. It's all bullshit, right? It's all like driving along with your rear vision, looking through your rear vision mirror. But if you look back over my videos of the last few months, you'll see that this is something I've been talking about endlessly, right? This channel is something I've been talking about a lot. This extension is something I've been talking about a lot, saying, look, that 4,000 level, very magnetic, and 3,600 is another one. I do think that I very hesitantly say I think the correction has been done. I think there's still a chance of a washout. If it happens, it'll go down to 3,000, 3,600 level. But for me at the moment, I think I'm going to square up. I'm not sure if I'm going to go long yet. I think I'd wait for a washout for it to go long. So you can see in those ones, the Russell it's had its day. It's hit that long-term channel. It's done a good 50% Fibo retracement. It's retested the 28.18 high. It's filled this gap from November 20. That it's a bit less convincing on the Nasdaq. It could have some more to go because it overshot so much. But that's still 30%. It's in line with what happened here. It could still go further, and I wouldn't put out of the question a level down here. The S&P, well, it'll be driven by the Nasdaq, but it's done some hard work. Could have a washout down to 3,500, 3,200. Nah, I really don't think so. I think there'd be masses of buyers at 3,500. I would certainly be winding up. Famous last words. The Dow, quickly for the US markets. Again, there is this line down here for that big lower bound, but you can see even the Dow has touched the lower end of this channel. It's a shallow retracement. The thing that concerns me about the Dow when I look at it is it's a bit like the Russell in terms of having shot up past the parcel, rolled over, and I guess it has done that work. But when I look at it, I do think that level 30,000 is a bit magnetic, and it does coincide with that 200 weekly EMA. So that does concern me a little bit. That's why I'm still a little bit bearish. So they're the equity markets and where we've gone. They've basically hit my targets, like particularly the S&P, that filling that gap there. That was it's my pride and joy, shall we say. That was the one that I really was expecting to get filled, and it has. Magnificent. Tick that box and cash it in. Now the yields, this is where I've been saying for a long time I expect the 10 years to go to around about this 320 mark, which is up there. And it did, and it's had a bit of a retracement. Let's just get this going. Is it going to be my friend or not? Let's do another one. From there to there and back. Right, let's just add in a couple here. Okay, yeah. Right, you can see that it has really like hit the ding, hit the dong. Look at that. It really, that was a very strong target for it to hit. I'm still short these bonds, but I am going to lighten up. I think I will do that. It's time for some more spread trades rather than the outrights, I think. So it's it really has done that hard yards, and that level where it came to, just let me get rid of this other one, that 313 level, it's not on the dot, but it's in the zone of what was going on in here. See that low there, bit of hoo-ha around here, bit of hoo-ha around there. It's hit its target. Easy money is done. I've been on this trade for months. It's been a good little earner. This is the US 2 years, same thing. That was the gap that I had in mind to be filled. It did the whole move right up to that 2018 high, and of course it's hit it, or came close, and started to come back, having a bit of a pause. Curve flattened, start to steepen. I think the curve's going to flatten again. Anyway, so the 2 years, that's well and truly hit my target as well. A couple other things. Gold. This, I've been short gold again. Sold some out at 1940, sold some more out at 1900 where it broke through. This is that pattern where it shoots up, past the parcel drops down. It's hit my target there. I do still think on a bigger, more macro level, there's some more joy to be had in being short. This shot up, past the parcel, false break, it'll come down, same as here, shot up, past the parcel, kind of false break up, try that, and then just drop like a stone. Gold, I think if it breaks through this, maybe a bit higher, like this 1780 level, it could really drop like a stone very, very savagely. That's what I've got my eye on. Shitcoin. Honestly, what a joke this thing is. Same thing where this is sort of weekly, shot up, past the parcel, dropped down. That's like an 85% drop from the high to the low. Look at that, 83. Same thing here, shot up, past the parcel, 85% from the high to the low. This one, right, shot up, past the parcel. Let's look at 85%. Right, takes it down there, right? So 85% corrections for this thing are in order. Look at that, how it drops like a stone when it breaks through the neckline, right? Same here, right? When it breaks through the neckline, you know, whether it's up here, when it breaks down, it breaks pretty suddenly. I mean, that's a real tanking in there. This 12,000, 11,000, there's a whole lot of reasons for it to go down there. You know, you've got a one-to-one extension of that move. This is a classic bear flag that got broken. I mean, just look at this. I don't trade this stuff. It's just it's rubbish, right? It's for idiots. You know, if you've made money, good luck to you. Get out. That's a classic kind of bear flag. And you can see when it broke down, it just like collapsed, right? You know, it's, you know, done that work down to that 61, kind of close. It got to like 26,000, something like that. A one-to-one is like all the way down here. Look at that, you know, because really the psychology of the market, what this says is like everyone's running into the party at a million miles an hour. They can't get enough of the party here. They have their party, they get a bit, you know, they get a bit tired. And then when it's time to leave, they run for the exits, right? You know, that's what happens, right? So this, when people run for the exits on this one, that is where it will go, in my opinion. The Aussie dollar, I'm still long the Aussie. I've been wearing that one. I'm still confident in the Aussie kind of rebounding. I think just as this was a nice leg down, like that, you know, that was like a 1 to 1.6. And this leg's a 1, 2, 3, 4, 5. And this was like a total 1 for 1. When it decides to go break up, right, it's going to break up to these levels, particularly with commodity prices. And I think once the RBA wakes up and acts on interest rates, then that could be quite a change for the Aussie. I think the Aussie is suffering at the moment just from dollar strength more so than the Aussie per se, because, you know, the euro and the yen, which are the big drivers of the you know, the dollar index, like this, you know, they've been really hurting, and that flows through to the Aussie. Also, just the standard risk on, risk off play that the Aussie is. I suspect if equity markets have had their leg down, then that will be reflected in the Aussie as it comes back. But you can see where it's come to. It's a straight on a 50% retracement of this move, ignoring this COVID washout. A very strong level for it to come back to. Bottom of this channel, to me, it's poised for a move up. And if we look at the RSI, that will probably reinforce that. Let's look at the daily RSI. Yeah, so you've got this positive divergence, right, where the price is weakening, but the RSI is strengthening. If I look at my favoured one on this is the 4 hourly. Let's have a look at that. Oh, fucking no-brainer, that one, right? To me, no-brainer, where it's weaker price on slightly increasing RSI. it might struggle around this kind of 70 to 71 level though, but it'll come back. That's my hope. Anyway, look, that's it. I mean, really, it's a bit of an I told you so kind of routine. But that's the thing. If you look at these things from a long-term point of view, which you need to when you're trading the markets, it's not a matter of where's it going to go to today. You need to put on the trades that are going to pay you off over a course of months rather than the next 10 minutes. So any of these other plonkers that you listen to, go back and look at what they were saying, like 3, 4, 5, 6 months ago. Back in October, September, October, if they weren't talking about bonds down here, give them the boot, right? If they weren't talking about this gap here, give them the boot. Because these things, it's not just me, these things are just blindingly obvious. If they weren't talking about this gap, like on the Russell, like for the last however many months, particularly when it was doing all of this, right, back to, it was obvious, it's back to July last year, right? If they weren't talking about it for those months, give them the boot, right? There's too many people that do these videos and they're absolutely and utterly full of shit. So that's my 2 cents. I hope that's worthwhile. I said this is not advice. This is my trading diary. This is what I do. So I've squared up the Aussie SPY. I'm still short the US market, but I think I'm going to square that up. I'm still short gold, wherever that is. I don't have anything in shitcoin. It's a joke. I'm long the Aussie. That's been going against me, but I'm comfortable that will come good. Famous last words. I've got some bund positions and some other curve positions on and some equity options and stuff like that. But whatever. There's too much to go into for this. Look, I hope that's been helpful. Have a look at the last couple of videos that I post. I'm going to post another one, which is an Elliott wave thing on the S&P. Just so that you can look back and you can put into context what I'm saying with what I've been saying for a few months. All right, have a good one. Ciao.